Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of Daily Stock, we are going to continue with our reviews of the quarterly earnings of major financial institutions. This session, we are considering the quarterly earnings for the third quarter of 2023 of Citigroup. This is a major financial player from the United States which has business operations across the world, and we are going to dwell on its quarterly results announcement to see what is happening in the financial world as a whole, and if there are any opportunities for us to capitalize on in the shares of Citigroup. So we will be considering the fundamental as well as technical aspects of the Citigroup, and accordingly we will be in a better position to form our opinion on the emerging opportunities in this financial space. Let us go through the key metrics released by the company itself. This information is being taken from the investors relation page of the Citigroup. So we are basically using the publicly available information to decide whether to invest, whether to sit on the sidelines, or for that matter, to get out of any long positions and even look to initiate the short sell. On the revenue front, the revenues for the Citigroup have risen both in terms of quarter on quarter as well as year on year. Now, for the last quarter, that is quarter ended September 2023, the revenue was at US dollar 20.1 billion, which is a substantial growth from the prior quarter as well as the third quarter of 2022, with the net income of US dollar 3.5 billion, with EPS standing at US dollar 1.63. The return on investment is solid at 6.7%, and ROTC stands at 7.7%, with enough of capital at the Citigroup's disposal. One interesting thing to take note of is that the company's book value of per share is almost twice or 2.5 times of its current market value. So, if you are a value investor, this is one key metric you might be tracking, and at the current valuation, the company's stock looks quite attractive, quite appealing. But if you are a momentum trader, momentum investor, then you might think otherwise, because for last couple of quarters and particularly in last couple of weeks, the momentum has been bearish for the stock. So that is a major concern, and we will have to wait for the momentum to turn from bearish to bullish if we are to go with the momentum. But if you are a value investor, then there is a clear opportunity in the investing space, given that the company's market price of its shares is at a substantial discount to its book value. But then that is your proposition whether to go with the momentum or with the valuation. The key highlights of the company's earnings are that there is growth on the revenue front as well as the expenses are higher, with growth being seen in major segments in which the Citigroup operates. The key segments for the Citigroup are services and markets in institutional clients group, the US personal banking, as well as banking in ICG. And in all these three segments, there is revenue growth. Even the net income is showing a growth in terms of quarter on quarter as well as year on year with a healthy CET1 ratio. So there is nothing to worry about if you are looking at the business risk to Citigroup at the moment in the current scenario. This is the statement. Let us look at the file. This financial summary in more details. I will need to zoom in a bit. Now, if we look at the total revenues net of interest expenses, here you can see that the revenues are 4% up in terms of quarter on quarter, and in terms of year on year, the revenue is higher by 9%. The operating expense is also higher, but that hasn't really stopped the company from improving its net earnings, as the margin is more or less stable. There has not been much of a difference in its operating margin, with EPS almost identical to what it was a year back, and substantially higher if we compare it to the last quarter, that is the second quarter of 2023. This is the consolidated statement of income, and the consolidated income is higher by 7% in terms of quarter on quarter. So not much seems to be changing for the company in the last quarter. But one interesting thing to take note of is its trajectory of the company's shares, the valuation of the company, which has been hit in recent quarter. And as we saw, a couple of other financial players also, the momentum seems to be quite negative for these major financial institutions of the United States, and the Citigroup is also on the downside. It's a different thing to say if it's in bear grip or not, but the momentum is quite negative, even though the earnings are not really that bad. And I think we are likely to see a turnaround in coming quarter in the valuation of the city. But we do need to wait it out, allow some stabilization to happen first, and think about getting involved for new investment once we start to see the signs of revival on these lower valuations. Let us now head to the technical side of the story to see what is happening and what are the key price levels to watch out for. This is the candlestick formation on the very day when the company's earnings came in. There was this wide fluctuation of almost 6 to 7 percentage point, this initial jump, but it failed to sustain, and that very same day after opening with this substantial gap on the higher side, it gave up all those gains, and from there on it hasn't shown any signs of stabilization. Rather than that, it is still declining, it is continuously losing ground, and here we have it now in today's session trading at the lowest price it has been in recent past. If I'm not wrong, it is not really far off from its 52 weeks low. It is probably at 52 weeks low at the current valuation, but as we saw in its earning reports, the things don't really look that bad, and maybe it is simply because of the flattening of the market share as well as revenue. That is one key concern for the investors at the moment, as the company has not really been able to grow is its business to the extent desired, and that is influencing the trajectory of its share price. And given that the EPS is almost identical to where it was a year back, it shouldn't be too much surprising that the current market valuation is almost identical to where it was a year back. This is quite quite an coincident in this current environment. But if we look at these formation, it is still of lower low and lower highs. So unless something changes on this front, we will have to trade cautiously. And if you are a trader, short-term trader, the best thing to do is going to go short on it, but that is also not going to guarantee you the profit at the current juncture, because it is now at the low level, and we do need to adopt a sale on rally approach even if we were to profit in this kind of bearish scenarios. So current juncture is not really offering that kind of opportunities as well, and we will have to sit on the sidelines for next couple of sessions at the least. And if we see opportunities after due consolidation, we can indeed take our chances. The levels to watch out for from the short term perspective are going to be around this middle line of this range, which is there around US dollar 41 to 42. So this is the immediate price level to watch out on higher side. And if the Citigroup share price doesn't really rally beyond much these levels, and if after due consolidation it starts to show the signs of decline again, we can go for short selling from the short term perspective. And from medium term to long term, we will have to adopt a similar approach. And here also the price level of around US dollar 41 to 42 is going to be key, because we have this decline setting in after rallying close to this identical level of US dollar 43.44 a month back. And after the earnings release, this was the level reached before it gave up all those gains. So from the medium term to long term perspective also, this is the price level to watch out for if you are adopting a sell on rally approach and go for initiation of the new trade. If you are fortunate enough to get these price levels, to short it again with the stop loss coming in just little above this immediate swing high. So you will have a better risk reward ratio also in place. So from fundamental side, the things are not that worrisome. But as I said in my introductory remark, The value proposition is good if you are looking at it from the point of view of book value. The company's share price is trading at the discount, but the momentum remains bearish. Momentum is still conducive to the short selling crowd, and because of that, we will have to be cautious here and trade accordingly while keeping the larger market sentiments in mind, but at the same time, not losing the sight of the fact that fundamentals are not that bad for the Citigroup, and we can expect a revival of sort or maybe a extended consolidation around these price levels of US dollar 40 to US dollar 42. So watch out for how the trajectory of the Citigroup evolves over next couple of weeks, and the opportunity is likely to emerge for us in any scenario. So that's all from my side for today's session of the Daily Stock, where we considered the fundamental as well as the technical side of the story of the Citigroup's shares. And I hope you find this information helpful to decide about your investing and trading decisions. Do write to me in the feedback, and I will be more than happy to take the discussion forward. See you next time around with a equally interesting stock to talk about and work with. Do come back next time around. Thank you all for joining in. Goodbye.